Hello students, this is CA Vishal Jain, your faculty for ACCA, FR and SBR paper. Guys, today I am here to discuss with you a very important concept on current taxes. Now this video is relevant for both FR and SBR students. Now understand, particularly in FR, there are questions which ask what is the amount of tax expense to be recognized in P&L. Now we know that the tax expense has two components, current tax and deferred tax. In this video, we will be discussing only about the current tax concept. Okay. Now, the questions particularly comes in this format, like the debit balance or the credit balance of the current tax is given at the start of the year. The question will mention that this is the tax payable for the current year. Now, please calculate what is the amount of tax expense to be recognized in P&L in the current year, and what is the amount of tax payable to be recognized in statement of financial position for the current year. This is the question. Now, and I have seen particularly students struggling in this concept. No more now. Okay, I believe this video will help you simplify that concept. Let's understand. So we'll start with the very basic. Let's suppose this is year 1 and this is year 2. Okay. Now, this is the amount of tax payable for year 1 is, let's suppose, $100, and tax payable for year 2 is, let's suppose, $150. Okay. Now understand. Now we know that the tax payable of 100 is an expense for year 1, is an expense for year 1. Okay, this tax payable of $100 is an expense to be recognized in year 1, but this will pay in year 2. When will pay in year 2. And as we know that this amount is not certain, this is just an estimated amount. This tax payable is just an estimated amount, and this hence this amount is subject to change in the future. Okay, meaning thereby when we will pay it, this amount might change. Okay. Now, so since this is an expense for year 1 paid in year 2, and this amount is not certain, so hence in year 1 we record the journal entry. As tax expense account debit to provision for tax, or some also write as tax payable. Okay, amounting to $100, and I believe it is clear to everyone till here, right? Now coming to year 2, similar thing will happen in year 2, right? No, but now one thing additional will happen in year 2. Understand this amount of $100 which I will pay here. Okay. Now it might be the case that I might have to pay $120. As I said that this amount is an estimated amount and it might change when I have to pay. So it might be the case that I have to pay $120. Right? Now against this $120, definitely there is a provision I have made in the previous year for $100. But what about this $20? Did I make any provision in the previous year? Now we all know that this 120 which we are paying in year 2 is an expense of year 1. And but we have recognized an expense of only 100 in year 1. Now the actual amount is 120. So does it mean that shall I go and open the FS of year 1 and change the FS of year 1? No, I cannot do that. The FS of year 1 is signed and closed. We cannot touch the FS of year 1 now. So then how shall we treat this 20? This 20 is an expense of year 1, but is not recognized as an expense in year 1. So standard says that since this is a change in the estimate, you have to account for it prospectively. Okay. Now hence what will you do? You will recognize this as an expense in year 2. You will recognize as an expense in year 2. Sir, what is journal entry for this? Very good, I will tell you. The journal entry for this will become provision for tax account debit. Tell me what is the amount of provision for tax? 100. Okay. Now, which was already existing. Now, Again, provision for tax, or some entities also say it as a tax payable. Account debit 20 to bank. To bank. To bank. Now this provision for tax we will transfer to tax expense. Now tax expense account debit to provision for tax. How much? 20. Is it clear everyone till here? I hope this entry is clear to everyone, right? Now what about this 150? What about this 150? See, the treatment of 150 will be similar to this 100, right? Similar. So right, what is the entry that pass? Tax expense account debit to provision for tax, that is 150. Right, again I will pay it when will I pay it? I will pay it in year 3, next year. I will pay it in next year. Again, this amount can be 160, it can be 140, it can be anything, as I said, this is just an estimate amount. Now that is not my question. My question is, what is the amount of tax expense that you will record in year 2? See, for year 1 it was very much sure, for year 1 it was very much certain that it was, you recorded an expense of 100. But what about year 2? What is the amount of expense that you will record in year 2? So in year 2, the standard says that you will recognize an amount of this first, and then you will recognize an amount of this one. These both. So what is the total? See, 150 plus 20 is 170. 150 plus 20 is 70. Meaning thereby 150 for the current year, which I will recognize only. 20 for the previous year also I will recognize in the current year. Why? Because that was a change in the estimate, and the estimates are accounted for prospectively. I hope it is clear to everyone till here. Now, in the exam, question doesn't give you this much detailed information. The question gives you the information in this form. The question gives you the information in this format. Understand this. Question will say that there is a debit balance of current tax amounting to $20, and for this year there is a tax payable of $150. Now the question will ask you to calculate what is the amount of tax expense for this year. Now first of all you have to understand what is the meaning of debit balance of current tax. Now come here. When you have to pay something extra than what you have made the provision, see what did you do here? For this extra you debited the provision for tax. You will say, sir, I have debited here also. No, but here you credited, right? So credit, debit knocked off. But this debit you created extra, means under it was, you have to make a provision of 120, but you made a provision of 100 only in previous year, means you made an under provision in previous year. You were required to make a provision of 120 in previous year, but you made a provision of only 100 in previous year, and hence you have to record that extra 20 provision in the current year, right? So this is the meaning of debit balance. Debit balance means what? Under provision in previous year. Now what is the treatment of under provision in previous year? Tell me, what is the treatment? Under provision means we will recognize the same as an expense in current year. Is it clear everyone? So now in this case, what is the amount of tax expense? 150 for the current year plus 20 for the previous year, amounting to $170. Tell me, is it clear everyone? Come on guys, tell me, is it clear everyone? Okay. Now taking the another situation, let's suppose rather than being 120, the actual amount that we have to pay comes to 80. Now what does it mean? We made a provision of 100 in previous year. We made a provision of 100 in previous year, but against which we are paying only 80. Against which we are paying only 80. Now understand this part. Understand the journal entry of this part. So when we pay 80, so what is the amount? Journal entry I will pass. Provision for tax account debit to bank. Okay. Provision for tax account debit to bank. Now amount will be 80. Amount will be 80. And in opening, what is the amount of provision? And in opening, what is the amount of provision? 100. Against which you paid only 80. Against which you paid only 80. Right? Now tell me, what does that mean? The provision for tax will still show a credit balance, right? Because the provision is a liability. Liability has a credit balance of 100, against which I paid how much? 80. So it will show a credit balance of how much? 20. It will show a credit balance of 20. It will show a credit balance of 20, means provision for tax already has a balance of 20 remaining. Now, in the current year, in this year, in year 2, I have to pay a tax of I have to record a tax payable of 150. I have to record a tax payable of 150. Now, question is, what is the expense for year 2? What is the expense for year 2? Now, understand. If you have to make a provision of 150 in current year, 20 is already lying in opening balance. Tell me, what is the provision that you will make? You need a provision of 150 in current year. 20 is already there in the opening balance. What is the provision that you will make? 130. 130, right? So your expense will be 130 in that case. Sir, I didn't understand this point. Let me explain to you. Let's suppose in your house there are five guests came to your house. Okay, for each guest you want to give one chocolate. For each guest you want to give one chocolates. Okay, now one chocolate. When you open your refrigerator, you already have 2 chocolates in your refrigerator. Okay, now tell me, how much chocolates will you purchase? So I need 5, 2 I already have, 3 I will purchase. Similarly, I need 150, 20 I already have, so I will make an expense, further expense of 130. I will make a further expense of 130, right? So this is the concept. This is the concept. I believe you have understood this part now. The question can come, for this the question can come, what if there is a credit balance of current tax? What if there is a credit balance of current tax amounting to $20 and you have a tax payable of 150? Then in that case, credit balance means, I will write here, see, credit balance I am writing with the blue pen. Okay, credit balance means what? Over provision means we have made extra provision in previous year, extra provision in the previous year, which we will adjust in current year and reduce tax expense. And reduce tax expense. I believe that is clear to all of you. What is the amount to be recorded in the tax expense? What is the amount to be recorded in the tax expense? Meaning thereby, if there is a debit balance, you will have to add, you will have to recognize, meaning thereby you have to add. If there is a credit balance, you have to subtract. Okay, now the ultimate crux of it is, current tax expense is equals to tax payable for current year. Provision for tax and tax payable are synonyms. Okay, provision for tax and tax payable are synonyms. Plus debit balance, okay, of current tax. Okay, or if it is a negative, if it is credit balance, then reduce credit balance of current tax. So this is the crux of it. Now with this, definitely you will be able to identify what is the amount of tax expense to be recognized in P&L. Now comes the concept of what is the amount to be recognized in statement of financial position. Let me discuss that part. Okay, now case number 1. Case number 1. If there is a debit balance, if there is a debit balance. Okay, now tax payable account or provision for tax account. Debit balance means what? Tell me. I will write here B by D opening balance. 20 was the debit balance, right? 20 was the debit balance. Okay. Now, what is the tax payable for the current year? What is the tax payable for the current year? So it will be liability 150. It will be liability 150. Sorry, tax payable for the current year is a liability. Liability will have a credit balance, right? Liability will have a credit balance. So I will write it here, this side. 150, right? Tell me yes or no. Tell me yes or no. Now tell me what is the amount transferred. P&L. P&L is 170. This account gets closed. Now, what is the amount we recorded in balance sheet or statement of financial position? 150 is the amount recorded in the statement of financial position. Now, this is the case of debit balance. Now, coming to the second case. Case number 2. If there is a credit balance. If there is a credit balance. Now, again, tax payable account. Tax payable account. Credit balance means it will come here. How much? 20 is the credit balance. Now tell me how much I need in the closing balance. I need 150 because that's the tax payable for the current year. Now, tax payable for the current year 150, right? Now tell me, what is the amount transferred to P&L? What is the amount transferred to P&L? 130. Right, 130. So this is the amount that is to transfer to P&L, and this is the amount to be recognized in statement of financial position. This is the amount to be recognized in financial position. Now, if you would have noticed, the amount that will be recognized in statement of financial position remains the same at 150, whether irrespective of the fact that there is some debit balance or there is some credit balance. Sir, why does this happen? Why does it happen? Understand again here. See, debit balance or credit balance of opening debit balance or credit balance will be paid here, and it is settled. It is settled. What goes to the next year is only this. What goes to the next year is only this, right? And that's why 150 is the amount of tax payable for the second year. For the second year, okay, which is our current year in our case. Which is current year in our case, okay. So this is the amount to be recognized in statement of financial position. And I believe this concept is very much clear to you. Still, if you have any queries, you can reach out to me. Okay. The link for my Telegram group, my WhatsApp group for FR or SBR is given in the description box. You can join that group. And yes, if this concept helped you, please like the video and subscribe my channel. Okay. Thank you. Bye.